What's going on, guys? In this video of Should I Invest, we are going to be talking about NVDA. It's a name that I haven't done. Decided to do it in this video, and I got everything ready to go here. We got our handy dandy MARKETSMITH tool. If you guys haven't found already, this is one of a wonderful tool for you guys to do some fundamental research, as well as you could use it for day trading. It gives you a lot of good scans, criteria that you can find stocks to trade. All right, so this is MARKETSMITH. If you guys want to try it, there is a link down in the description. You guys can take advantage of it. All right, next thing we have is our handy dandy Excel sheet. This is a wonderful tool that I've built to give us access to all the information that we need to see if it's a good investment or not. And of course, we have Yahoo Finance. All right, so let's pull up our handy dandy Excel sheet. We're gonna plug this in here and type NVDA. All right, we got NVIDIA going. Now we need to find the EPS. There we go. It should load up right there. Perfect. All right, and the PE. So we got the PE is red, the EPS is green. That's great. So next thing we need to look at is the return on equity. And how do we find that? Well, we're going to jump into MARKETSMITH right here. And on this side, it's going to tell us our return on equity. And we can see the return on equity is 52. So we're going to plug that in right here. Perfect. We get a green figure. And next, we need to pull up Yahoo Finance and take a look at a few things here. So what are we looking at? We're looking at the total debt versus the total assets. So we're going to come here. We're going to look at total debt. All right, total debt is all the way down here at 17.5. We're going to put that in there. And total assets, we're looking at 44. Great. So already something that you want to see, a positive. You want to see more assets than debt so you can have that debt paid off. All right, so our total debt to asset ratio is a 2.5. So we're going to keep going here. We're going to scroll over. And what are we looking at next here, guys? Next, we're looking at current debt versus current assets. So we're going to go back to this page. We're going to look at current debt and asset. Here's our current asset. We're going to pull it in right here. All right, next thing we're going to do is find the current debt. That's 4.3. Perfect. Awesome. So another positive figure. What does that mean? We have enough current assets to pay off the current debt. All right, so that's 6.6%, another green figure here. All right, next thing we're looking at is operating income versus total revenue. And how do we find that? Well, we're going to have to jump back into the income statement. All right, and we're looking at total operating income. All right, so total operating income right here, we got 7.29. I'm going to plug that right in. And total revenue is all the way up here. We're going to plug that right in. Perfect, 26%. Remember, we want this figure to be in the 15 plus. All right, so we got a great figure right here. Now we need to see, is the cash flow increasing or decreasing? So we're going to pop over to the cash flow. Let's take a look. We got January 2020, 4.7. January 2021, 4.6. January 2022, we got 8.1. So it is increasing. But the trailing 12 months here, we've gone down. Obviously, we understand what's going on in the markets and how there's been chip shortages and whatnot. So this is impacting the way the cash flow has gone this past year. However, overall, the cash flow is generally increasing. So that's what we're going to put here. And we're going to see how much this is owned by management. And to do that, we're going to jump back into MARKETSMITH. We're going to look at management ownership here. And we're looking at 4%. Great. All right, so seems to be pretty standard across the board. You know, the management ownership at a 4% is a good number. Next thing we want to look at is the ownership of funds. Is that increasing or decreasing? So MARKETSMITH here is going to tell us that. All right, so let's take a look here. 4,200, 4,500, 4,600, 5, 5.3, 5.5, 5.3, and 5.4. So generally speaking, the numbers here are actually going up. All right, so funds are definitely increasing on this one. All right, so here we go again, one more pass on this one. Now let's take a look at the technicals and understand where do we really want to enter this name. Okay, so we have a few things that's happening right now. As of recently, if we go to the daily chart, you can see that NVIDIA has had a nice run up into this 230 area. Okay, but what do we need to do? We ideally want to wait for some sort of a pullback to cost average. And if you guys are not in this name and haven't really started a position, you could possibly start to look to scale in at around 190, maybe 1/7 of your position size, 1/6 of the capital you want to invest, and slowly add as this possibly might come back down to the 175s, maybe the 150s. You know, we never know what the market's going to do, so you always have to give yourself ammunition in case things pull back. So at this highs, maybe I'd wait a little bit farther towards that 180 area, maybe the 175, average in, start scaling, get your cost, your dollar cost average, and then based on the fundamentals that's behind your back, eventually you can hold this for long term and see if there's any longevity and if this really turns around and does well. All right, so hope you guys found value in this. If you did, go ahead, comment down below. Let me know what stock you want me to do next, and we will dig in, do all the fundamentals, look at all the fund ownerships, and decide whether it's a buy or not. All right, guys, thank you for watching. Make sure you subscribe, and we'll catch you next week right here on YouTube.